This month on the Trending Report, we're going to talk about a mid-year update. Where have we been? Where are we going? What should we be doing as we look to the second half of 2024?
Welcome to the Trending Report, brought to you by USA Financial. The Trending Report is a bi-weekly show that aims to focus on the trend lines rather than the headlines. Each episode features commentary around the state of the market, as well as other factors that may impact your personal finances. The host of the Trending Report is an investment advisor representative of and securities are offered through USA Financial Securities, member FINRA SIPC, a registered investment advisor. The Trending Report is educational and not intended as personal financial advice.
Now, you might notice that Mr. Mike Walters is not behind the camera, and although I have snuck into his office, I am certainly not the venerable, the honorable Mike Walters. This is merely Kevin Roskam at USA Financial. And in this time of year, it's always interesting to talk about what we're headed for. Of course, this is an election year, and the electioneering is starting to ramp up. And one of the things that elections always do is they affect our portfolio. The question is, how much? And so I want to bring you, as we talk about this middle of the year 2024, and I'm recording this near the end of June, some reminders, some things to think about as we look at what's going to happen or what may happen towards the end of this year. And the first reminder, as always, is something that we say here all the time. Short-term emotions kill long-term plans. It's always important to remember what we're doing here with our long-term money. Long-term, it's a key word. You see, because when your advisor sets up a long-term plan, they should be taking into account short-term volatility. And always in election years, we see some of that volatility. And it's important as we go forward and we start to think about what may occur over the next several months, that we consider the fact that a lot of this planning has been built into our portfolio. Now, nobody knows where the market's going to go. We don't know just because something happened 4 years ago and 4 years before that it'll work exactly the same way this year. But we do know that if we have an unemotional investment plan in place, if we have the ability to rely on disciplined, unemotional approaches to long-term investing, we usually have a better chance for long-term success. And so with that in mind, one of the things I want to show you is a couple of charts for the S&P 500. And those charts, as you'll see, are election year charts. Going back to 2012, I didn't include 2008 because of the financial crisis. I don't think that was a typical election year. And so in 2012, what you see in the performance of the S&P 500, first of all, when we start at the beginning, over on the left-hand side, for me, we see from left to right that the stock market finished up in an election year. And that's great. And that's going to be the recurring theme. But the thing that we see along the way is volatility. Now, you may have heard the phrase before as well, that the price of long-term growth is short-term volatility. We've got to get through some of those volatile times to allow our portfolio to experience long-term or longer-term growth. So what you see in 2012 is a lot of that volatility. And the result of not the election, but the election year is that when you started the year versus the end, it was positive. 2016, we see something very similar. We actually see a little less volatility as the year goes on, but we started in January at a lower point than we ended in December. And it's another simple visual of the fact that even with some volatility, even with a little bit of fear in the marketplace, typical election years, especially presidential election years, are positive. Now, past performance doesn't guarantee future results. 2020 was a unique year. And what you see in this 2020 chart is you see that initial reaction of the markets to COVID. But what you also see from January to December is a positive year. And so as we look at this year, 2024, so far, the stock market has done very well. Now, there are various reasons for that. And, analysts and economists and people much smarter than me can worry about why the market is doing what it is. And that's fine. And to a certain extent, I worry about that as well. But I don't want my investments to worry about that. And so when I talk about unemotional, disciplined investing strategies, we talk about the ability to be able to rely on investment strategies to guide our portfolios. And those strategies might evaluate on a daily basis what the market does. Some of them evaluate on a weekly basis. Some are quarterly, some are annually. But the key is not to have our emotions interrupt their operations. We have to allow those investment strategies and the managers that manage those strategies to do their job. And so one of the things we start to think about this time of year, and will even into the fall, that'll get more and more pronounced. What should we do now? What should we do to anticipate the November elections or anticipate the end of the year? And I would tell you, if you have a long-term plan in place, and if your long-term equity investments specifically are a piece of your overall financial plan, my answer to what should we do in anticipation is we should do nothing. Because if we have an advisor that we trust and an advisor that is knowledgeable, and if that advisor has given the responsibility to third-party money managers to manage your money unemotionally and on a disciplined set time schedule, that disciplined approach will always, in the long term, outperform emotional decision making. And so where have we been year to date? There's been volatility. There's been bad news in the economy. There's been bad news in geopolitics. The market itself, you can see, has had some volatility. But overall, it's been a positive year. Even for risk managers, we've done a pretty good job overall managing the risk and taking part in some of this upside. Now, for the second half of the year, we do have some elections coming up, and it will no doubt be exciting, and it can tug on the heartstrings. What I wanted to do is just show you a couple of quotes. This is from Adam Lampe and Kiplinger. What will the stock markets do as elections near? Well, the answer is nobody knows. But one of the things we know is that economic and inflation trends consistently outweigh electoral outcomes. So it is wise to maintain a steady investment approach based on market fundamentals. And then above, while the election may cause more buzz and excitement, it's important for investors to focus on broader economic trends rather than short-term election-related noise. Now, the nice thing about what we typically see with the USA Financial Exchange and USA Financial Formulas and the partners that are on the exchange is that's exactly what money managers do. They focus on broader economic trends. And that's where, regardless of what we hear in the headlines and where our heart tries to pull us, we should have reassurance that the people managing our money are not experiencing the same emotions we are. Here's another one. What should investors expect from the market this election cycle? Historically, financial markets have rewarded investors who stay the course. It's so important to understand that as we look towards the remainder of 2024, and as we look back on past elections, past years in the stock market, that when we have a plan put together and that plan makes sense, and when our advisor has done their work, it's important to allow the plan to work. And so what I wanted to encourage you to do today in this really mid-year trending report, just like always, don't allow your emotions to get in the way of your investment plans. Don't allow what we see on the headlines and in the news to change the course of your investment strategy. This is Kevin Roskam with USA Financial, and this has been your monthly trending report. As always, thanks for your time, and thanks for listening.
Thanks again for listening to this episode of The Trending Report, powered by USA Financial. We invite you to visit usafinancial.com to find out more about our work with independent advisors and their clients all around the country. Any projections, targets, or estimates in this report are forward-looking statements and are based on the firm's research, analysis, and assumptions. Due to the rapidly changing market conditions and the complexity of investment decisions, supplemental information and other sources may be required to make informed investment decisions. All expressions of opinions are subject to change without notice. Clients should seek financial advice regarding the appropriateness of investing in any security or investment strategy discussed.